What's happening? Today, August 1, 2025, President Trump signed an executive order rolling out a sweeping tariff regime affecting around 68 to 92 countries, with headline rates ranging from 10% baseline up to 41% in some cases. Canada has been hit particularly hard with a 35% levy, and Brazil and India face rates around 50% and 25% respectively. These tariffs increase the U.S. average import tax from about 13.3% to 15.2% compared to a pre Trump 2 baseline of roughly 2.3%. Market reaction: U.S. stock futures fell around 0.9 to 1%, signaling a broad sell off in anticipation of the new rules taking effect on August 7th. European stock markets, like Germany's DAX, dropped up to 1.7%, while the UK's FTSE, France's CAC, and others sank about 1% each. In Asia, regional indices declined. MSCI Asia Pacific ex Japan down 1.5%, Japan's Nikkei minus 0.6%, China's CSI 300 minus 0.5%, Hong Kong's Hang Seng minus 1% or more. Investor sentiment and strategy. Institutional investors are raising alarms. A July 29th survey found that roughly 64% believe the tariffs could lead to persistent inflation and slower growth. About 41% are shifting into defensive value stocks, while 40% are increasing cash positions. Nearly half think markets have underestimated trade-related risks. A noted trader, Kevin Muir, now sounds bearish on the U.S. market, warning that positive news is largely priced in. Currently, he sees over 300 S&P points downside risk versus limited upside potential, citing high valuations and policy volatility. Market players had been optimistic due to megacap tech and AI strength, but experts like JP Morgan's David Kelly caution that trade policy risks could put this outperformance at risk. Macro outlook and broader effects. Early indicators show inflation ticked up in June, and the tariffs may intensify price pressure, raising the stakes for Fed interest rate policy. Fed funds futures now imply just a 39% chance of a rate cut in September, down from a prior estimate of 65%. The tariffs are being seen not just as inflationary, but also as distortionary taxes that could weaken investment and global value chains over time. If retaliatory measures escalate, the risk to long term growth and productivity increases. Some mitigation exists: prior deals with the EU, Japan, South Korea, and a 90-day reprieve from Mexico. But many economists warn that uncertainty remains elevated ahead of the August 12th deadline for China related tariffs. Bottom line: Trump's latest tariffs, effective August 7th, have triggered immediate market declines across the US, Europe, and Asia. Investors are increasingly structured defensively amid concerns over rising inflation, profit margin erosion, and supply chain disruption. While the broader impact may unfold gradually, the consensus is clear: market complacency may be ill advised.